Hello and welcome to the Weekend Investing Daily Byte. We are shooting this episode on 27th of June. And what a remarkable day after a lull of a period of the last few sessions, where the Nifty came back very strongly in the last 2 hours, as you can see on your screen. And we have now again crossed 18,800 levels. And on a weekly basis, we are pretty much at an all time high, maybe 0.5% away. And hopefully, in the next two sessions that we have in the week, Thursday now being the holiday for this week for Eid, we should be looking at a new high very soon. That is the current situation. This formation that we had in the last 2 weeks was looking like distribution, but today there's new ray of hope that we may break out of this congestion, although it is not yet fully done. The Nifty heat map is quite green today. The largest moves have come on the back of banking and steel, along with some IT stocks. So HDFC and HDFC Bank, the twins, have moved up. There is a date of merger available now. I think mid of July is when HDFC will stop to trade. 42 shares of HDFC Bank will be allotted to every 25 odd shares of HDFC holders, and that will be the end of HDFC trading. State Bank of India also doing well. Ratings agencies have upgraded country's banking system, so good fillip up for both private and public sector banks. State Bank up 1.6%, Kotak Bank 1.1%, and other banks, ICICI Bank, HDFC Bank, uh, along with life insurance companies and finance companies also. JSW Steel and Tata Steel were up in the steel space. Bharti Airtel doing well at 1.5%, and FMCG and energy power stocks taking a rest day today. Sectoral overview: real estate comes back with a bang. Reality index up 1.2%. For the month now, it is the largest gainer at plus 9%. For 3 months, largest gainer at 36%. And for 12 months, largest gainer at 21%. So real estate is definitely in good momentum. Private banking space up 1.1%, PSU banking space up 1%, IT up 0.7%, metals up 0.7%, infra 0.5%, and others between 0 and 0.3%. FMCG only losing marginally at minus 0.1%. Mid-cap index, which had dropped very sharply for 2 days, has come back, although not yet fully recovered from the high that it had made, but yet a good recovery from 34,700 levels. Small cap index also recovering, nearly closing above 2-day high, which is a very good sign always, and very close now to its all-time high again. Nifty Bank is where the action was, where some while we're still stuck in this box till 44,500, but a very nice breakout from this trend line, and hopefully we will again retest the top of the box very soon, and then let's see where we go from there. Stock of the day is fertilizer and chemicals, not because it has gone up so dramatically, up from 100 rupees to 462 in the last 6 odd months, but for the fact that one wants to point out some price behavior in the market. So just like, there's always the case where there's not just one cockroach in the almirah or in the kitchen, wherever you may call it. There are many more. Similarly, these large candles that form on an hourly or a daily basis, like with large candles here, large candles here, large candles here, then another set of new large candles, then another set of new large candles. They always come in, packs. They're never alone usually. So whenever you see a large candle getting made, assume or at least be alert that more will come soon. There may be some cool off immediately on up if the first day itself has been a 20% gain or a 30% gain or a 10% gain, But be alert that why such a large move happens in any stock, because something has changed. The market's behavior towards that stock has changed. There is demand in that stock which is outstripping all supplies at those levels. So what one needs to understand is that we are always in a demand supply game. The narrative may be built around it, whatever it be, but it is always a demand supply game where stocks or indices remain in equilibrium until there is a shift in that equilibrium. And that shift in that equilibrium happens because demand and supply are always there at all points, but they match at equilibrium, more or less. And then suddenly something may happen. Maybe it is some news, maybe it is some liquidity flows. That demand may start to outstrip supply, and that's when price moves up. Or it may happen the other way around, where supply is outstripping demand and the price moves down, until such point where the demand matches up to the supply, or the supply matches up to the demand, and a new equilibrium is formed. So this is why large candle formation on charts are very important to spot, especially if you're doing discretionary investing, because these are signs of unusual activity in the stock, which could be resulting in repricing of the stock. That may be that repricing point, the next equilibrium may be far off, and today maybe only be the first move towards that. So, and if you look at it on a closer basis, in the last 2 weeks also, there were several signs here, that these large moves are happening, then a few days of cool off, then a large move, then a few days of cool off, and today again there was a large move in the morning. So this is something of price behavior pattern recognition that you can use in your really high performance winning strategies in your portfolio. That's all I have for today. Please subscribe to the channel, give a like to the channel, and do spread it within your investing groups if people want to know more about momentum investing, if people want to know more about how to trade better, how to invest better. Do share this. Thank you. Bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.